Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian bulls failed to keep the upward momentum going. As the market selling pressure increased, prices eventually slipped from the 72-cent handle and looked back towards the trigger level, which is at 71.75, also known as the 60-day moving average. This was the low and it did stage a mild rebound. Earlier in yesterday, the data showed that the trade surplus rose by 57.1 billion in December from 44.7 billion in November for China's figures. However, the imports contracted 7.6% compared to 4.45% decline in exports. On the technical front, though, I still feel the market is poised for another down test, with the RSI breaking down also does look towards 71.75. Now, a break beneath there does give further scope towards at least 100 points down to 70.75 and reassess from there. Any advances should find resistance still around 72.30 to 60. Overnight, the US dollar, which measures the greenback strength against a basket of 6 major currencies, was remained to a confined range, along with the euro. Latest polls show, though, that they are blaming Donald Trump for the government shutdown. It is assessed, though, from a technical point, from the break of 114.85 to the return challenge, hasn't posed any real threat to a further sell-off, though the RSI is just flirting around the 50 midway point. We do need to see further breakdown in the MACD to get further indication that the market is breaking down and maybe looking back towards the 113.15.20 level. Any advances at this stage should find resistance around the 115 to 115.5. The dollar yen still at this stage hasn't failed to make any significant moves, and with the resistance still capping at 108.60.80 does suggest that we could see another down test. The immediate support comes in at 107.65.75, and until we get a break of 108.60.80, then the view still remains down towards the region of 106.50. Sterling posted a long-legged doji after some news came through that the European Research Group, also known as the ERG, Brexiters would vote in favour of the Prime Minister's Theresa May's deal. After touching its highest level since November of 129.29 overnight, the market has ended in a long-legged doji. It is assessed, though, that further news will be coming out today in the UK Parliament about to hold its second attempt to vote on the Prime Minister Brexit deal, which should come out later in the UK today. So keep an eye on that if you are trading the pound. Gold is also consolidating after posting a gravestone doji. Nevertheless, the market is still a little bit weaker, and we could still see a move towards 86 or down towards the region of 1,272 to 74. I'm not a seller. I'm looking to buy the market as an opportunity to see a rebound and take out the level of 1,300 and look up towards 1,350 to 65. Immediate support is seen at 86. And wrapping up with oil, well, the market did post an outside range day and has given confirmation after taking out 51.10. After losing another 1.7% overnight, it did confirm the bearishness to the oil and now looks towards a target of $48 and reassess from there. Resistance at this stage is seen roughly around 51.5. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.